Now, China says it will raise tariffs on U.S. goods to 125% in an escalation of the trade war between the world's two biggest economies.
Imagine waking up and finding your grocery bill has doubled. Your rent is rising. Your job feels less secure. You ask why, and the answer: a silent decision made halfway across the world. Sounds distant, but it's already hitting home. What does it mean when a global superpower pulls its money from the U.S. economy? What if this ripple becomes a wave that floods your finances, your savings, your future? And more importantly, what does this mean for you as a buyer? In this video, we'll break down how China's financial freeze is setting off an economic domino effect, one that could reshape industries, international partnerships, and the prices you see every day. Let's dive in. In 2016, China invested $46 billion in the United States. Fast forward to 2024, and that number collapsed to just $2.3 billion. Now it's nearly zero. What may seem like a quiet policy decision is actually a powerful blow, one that's shaking the foundation of America's financial stability. This isn't a pause, it's a pivot. China isn't just freezing investments, it's redirecting them into regions that support its long-term influence. As Beijing turns its back, U.S. companies are already feeling the tremors. Take Hartwell Tech. Overnight, it lost $180 million. To survive, it turned to emergency loans at sky-high interest rates, 11.3%. That's nearly double the norm. When credit tightens, businesses cut spending, they freeze hiring, they stop expanding, and eventually, some of them break. This cascade spills directly into your life. Higher loan rates hit prices at every level, from goods on shelves to utilities and fuel. Meanwhile, tariffs on Chinese imports are driving up costs even further. The average American household is spending an extra $1,950 per year just to keep up with daily needs. Inflation remains stuck at 3.6%. Wages, flat. Intel's chip projects in Ohio, suspended. Battery and robotics plants, put on hold. The promise of economic recovery is turning into a trail of cancellations. U.S. manufacturers aren't faring any better. More than 60% report serious funding shortages for expansion. What this means is clear. Millions of jobs are at risk. The slowdown in manufacturing isn't just hurting big corporations. It's tearing through entire communities. And the damage doesn't stop there. In just 90 days, $120 billion flowed out of U.S. stock ETFs. Major investors from Japan and Norway are scaling back. Confidence in the American market is fading. At the same time, U.S. businesses are staring down a wall of debt. By 2026, $4.1 trillion must be repaid. But with foreign capital retreating, companies are now turning to junk bonds. These come with yields nearing 10%, twice as high as in 2022. That's not a sign of strength. It's a warning of a debt crisis. Meanwhile, China is accelerating. It cut ties with Taiwan Semiconductor Manufacturing Company, the world's largest chip maker, and ASML, Advanced Semiconductor Materials Lithography, the Dutch supplier of advanced chip-making machines. Then it began building its own chip ecosystem. $75 billion have been funneled into domestic semiconductor initiatives. 50,000 engineers were recruited, many from Huawei and Silicon Valley. Their factories now run on mostly China-made equipment. And they're not just keeping up, they're leaping forward. Companies like Sakar in Shenzhen have developed homegrown lithography tech. Huawei launched a 7-nanometer chip built without EUV equipment. SMIC is testing 5-nanometer chips and pushing for even more advanced designs using AI. Europe's not immune. ASML's revenue dropped 27% after China backed away. Beijing also began dumping U.S. bonds and tech stocks like Apple and Nvidia. The chip war is becoming a full-scale financial confrontation. If Beijing sells off strategically, Wall Street could see its worst crash in decades. Mortgage rates could spike. Retirement portfolios could collapse. Your financial security could disappear without warning. And while this unfolds, a tariff war escalates. The U.S. imposed a 104% tariff on Chinese goods.
When America is punched, he punches back harder. That's why there will be 104% tariffs going into effect on China tonight at midnight.
China retaliated, banning U.S. tech firms, cutting rare earth exports, and doubling down on its own internal development.
Finance Ministry has just made an announcement that remember there were 34% tariffs on all US goods coming into China. That's now been increased to 84%.
Caught in the middle? American workers, farmers, small business owners. While politicians argue, regular people are paying the price. Then there's Canada, America's quiet but crucial partner. It supplies 4 million barrels of oil daily. Now, Canada is exploring new deals with Europe. If those barrels stop flowing south, New England's gas prices could jump by 40 cents a gallon. It's not just oil. Canada sends over 11,000 gigawatt hours of electricity to the U.S. grid. If that stops, energy prices will spike. Grid stability could falter. The cracks are forming. Auto manufacturers are cutting output. Tech companies are locked out of massive foreign markets. Farmers can't export key crops. And even longtime allies are losing patience. The European Union initially resisted Trump's tariff push, but facing pressure, it's now proposing tariff-free industrial trade to de-escalate. Trust has been shaken. Allies are retreating. Germany is pushing for urgent diplomatic talks. Canada has already imposed counter-tariffs. Friendships are fading fast. Everyday Americans are feeling it too. Bananas, shrimp, salmon, and coffee now carry tariffs between 10 and 46%. The moment current supplies run out, grocery bills will surge. Diplomatic language is shifting. Canada's foreign minister says the relationship with the U.S. will never be the same. Prime Minister Mark Carney openly vows to resist any economic pressure.
There may be some tough days ahead for Canadians, but I also want to reassure that we are prepared. We foresaw this. We have been taking steps, and we are continuing to take steps to protect Canadians.
And within the U.S., messaging grows more erratic. Baseless accusations, attacks on long-standing partners. The tone is no longer strategic, it's chaotic, and people are noticing. The real victims aren't foreign governments, they're families. Groceries are more expensive, gas costs more, jobs are disappearing, retirement savings are shrinking, and still there's no clarity from the top. This isn't just a foreign policy issue, it's a domestic crisis. What happens if China dumps another wave of bonds? If Canada turns off the pipeline? If Europe rewrites its trade alliances? This is no longer about tariffs. It's about global influence, economic survival, and national identity. You're not just watching news, you're living the consequences. Subscribe now to stay informed, because if you don't understand what's coming next, it might hit your life before you can prepare. And trust me, this is only the beginning.